I do want to start off here with the consumer, with consumer spending, and more importantly, with consumer borrowing. How is that holding up for your customers?
Yeah, well, first, thanks for having me again. And, as you pointed out, there are some good things that are happening despite the risks that we see and despite the increased inflation. Consumers still come into this environment with a lot of liquidity, which is really helping them weather any impacts of inflation thus far. We're seeing people out there spending. You see credit card spending up double digits, year on year again consistently. You still see, good debit card spending as well. And you're starting to see loan growth, not only in the consumer side, but also in the commercial bank and the corporate side. And so you do see some really good activity that's really helping, propel things forward, in the economy and for us as we look towards the latter part of the year. And then you also saw for us in the quarter, we did make some more progress on some of our priorities, whether it was, additional efficiencies, coming through the expense line. You saw us return a bunch more capital back to shareholders, and you also saw us make some progress on our risk and regulatory agenda, and also launch some new products. And so there was a lot of good in there as well.
Within the consumer space, I know a key headline that we've been following is, of course, 30-year mortgage rates topping 5% for the first time since 2011. How do you think generally about rising rates, not only maybe on the mortgage business, consumers pulling back, but also the way you're thinking about now a re-steepening of this yield curve?
Yeah, well, you're coming off a quarter where I think we've seen, if it's not the largest increase in mortgage rates in a quarter ever, it's pretty close. And so I think that's definitely going to have an impact on the mortgage market. And first, you're seeing that in refinance volumes. And as you look at the latter part of March, you've seen those refinance volumes come down pretty quickly, and you're seeing a lot of the external organizations start to project that out in their mortgage market projections for the rest of the year. But you're also still seeing some good activity in the purchase market, where there's still a good demand out there, although it is a little more expensive now with mortgages. Mm-hmm. And the good news is, so far, none of this is translated into any real stress from a credit perspective, and so I think that's a good sign, I think, at least so far.
Perhaps some of the stress falling on your head from the analysts today was largely about expenses and then coming in slightly higher than was expected, Mike. What do you make of that? How are you looking to be cutting costs?
Yeah, look, we're in this multi-year journey to make the place more efficient and really manage the company, better. And I think we're continuing to make the progress we thought we were going to make. And as you really have to look at the full year results. And as we said on the call, we continue to have a lot of confidence in the plan that we laid out for a full year, and reiterated our guidance on our full year expenses, despite some higher costs in the quarter. And so we still feel really good about and have confidence that we'll be able to do that. And I would just point out, it's not only just about saving money, it's also about making things easier for clients. And as we go through and automate and make the place better, clients start to feel that as well. And I think we're starting to see a little bit of that too across many of our businesses.
You're still under an asset cap, if that's correct, Mike, here. How are you navigating that right now?
Yeah, really, we continue to have to work under the asset cap, and really where that comes into play is on the deposit side. And so we've continued to make sure we're managing our deposit base, and the good side of that is that we've really worked to optimize our deposits as you go through the last couple of years. And the way that translates is we've really seen an increase in the kind of least rate sensitive deposits in our retail and consumer businesses over the last couple of years. So they now make up a much bigger part of our portfolio, which actually positions us really well for the rising rate environment, which should be really beneficial for us as we go through the rest of the year.
Curious how you're thinking about some of the global geopolitical events. We note, of course, you are much more U.S. focused than some of your peers, which are a little bit more global in nature. But sort of any headwinds that you see, particularly with Russia's war in Ukraine?
Yeah, as you pointed out, for us, the direct exposure is very small and very minimal. But really, the impact that it has is on the broader economic environment, whether it's through inflation, commodity prices, and other supply chain issues, in other industries. So our clients will feel that over time for sure, and you'll start to see that come through. Now, part of that is driving loan growth in some of our commercial clients, where they're building inventory, dealing with inflation cost, and so that's causing them to grow use their lines a little bit more as well. And so that's generally how we're going to feel that in our businesses.
In general, are you optimistic about how your clients are able to navigate the inflationary pressure and indeed the interest rate outlook that we've got coming upon us?
Yeah, well, so far so good, right? And clients come into this, both on the consumer side and the corporate side, in a much better position than they would have in other rising rate environments. With lots of liquidity still, maybe down from the peaks in COVID, but still much better than pre-pandemic. And so, so far, these risks that we've seen in inflationary costs really haven't translated into any stress in any of the segments within our business. And so, again, so far so good, but it's something that we'll continue to watch, and we're hopeful that clients will be able to manage through it pretty effectively.